Well, welcome again to another edition of MEMA Supplier Insights. I'm Mike Jackson, Executive Director of Strategy and Research at MEMA, the Vehicle Suppliers Association, and very pleased to have with me here today Jason Kaufman, U.S. Automotive Consulting Leader at Deloitte. Jason, very pleased to have you with me here, and really to kind of kick off our partnership as a partner here on the Automotive Supplier Barometer for this year. And so with the first quarter being on production planning and electrification. Welcome, and great to have you here to discuss the results.
Yeah, thanks so much, Mike. We really appreciate the opportunity to sponsor the barometer with you across this calendar year and increasing our investment across the supplier community.
Effectively, the Supplier Barometer Index, is a momentum index. And so what we're seeing is that for the past 4 quarters, it's been net negative. There's been more pessimism in the market. And so that simply means that pressures continue to compound. Some thoughts there from your side. Obviously, a bit of volatility here relative to the economy and the rest. And so, welcome your input.
Yeah, thanks, Mike. Now, I don't think any of us are overly surprised with some level of pessimism, but I think there's still some underlying hope. I think looking at annual volumes for the year of what's being projected are fairly solid. It's not like we're falling off a cliff or any kind of concerns from that standpoint of overall volume. But I think from overall business, feeling the pressure of inflation, some uncertainty as we start this year. I think everybody finished really strong. We saw great bonuses for labor this year coming from the big three and the like. So I think there's some positive momentum, but I think also the harsh reality of the uncertainties around inflation, banking, with the squeeze on the overall economic environment, and then still some geopolitical uncertainty that's in play. I think everybody's being a little conservative going into this year with hope, but also some level of pragmatic, planning of just being a little conservative to start the year.
How has your company experienced a number of these factors here over the following time frames in terms of a 12-month change versus a 1-month change, and then broken out by supplier size in terms of revenue? So new orders, 100 being neutral. New orders, a 12-month change, it's quite positive. A 1-month change, there's a meaningful decline. Production, pretty strong on the 12-month side. Again, a pretty meaningful decline. Employment, very strong, 137. So well over the 100 threshold. But what's interesting here is employment actually remains quite high in terms of the kind of change. So looking to drive that, but certainly a big factor. I think a couple of others here. I mean, in terms of customers' inventories, remain quite high as well. Remain almost in line with the 12-month average. And then costs here. Costs is another big one where clearly we know that inflation's been something that's been enduring, and it's actually stayed stubbornly high. So here around that 6% threshold is where we're at. So it's pretty remarkable that again, inflation has moderated from its peak and yet remains a pretty significant pressure point once again. Any thoughts there to add?
Yeah, I think you captured the summary really well. I think as we listen to quarterly results from all the suppliers, I think as you touched on new orders, the propensity to kind of talk to the shareholders, particularly around how they're winning the new business, right? What percent of your business is tied to new programs? How are you doing, with winning your fair share of whether it's an EV platform or the like, and making sure they're seeing the resiliency of that business model, the pivot to those types of programs, still being able to chase some of the growth that's coming there, along with the stable part of the business. So seeing that, fall in the neutrals area, but I think there's been some, positive movements across the supply base of being able to keep up with those net new orders as they chase EVs.
So on that point, production planning, electrification, let's jump into kind of the next piece here. And this one's really important because if we look here at the gray line, we've asked our members, estimate the required 2023 industry volume needed to achieve break even in North American operations. And so, here in 20 and 2021, we see that, effectively that black line that represents production was, break even was above that threshold. And so that, clearly underscores the pain that so many suppliers faced at that time. So if we look here going forward, thankfully we're in a stronger position. And you'd indicated, you mentioned this in terms of additional volume. So supplier break-even estimates are up about 150,000 units from a year ago to 13.9 million units. And the bright spot there is that the average of our members in terms of the production, forecast, the expectation is right around that 15 million unit mark. And so we know that some forecasts are a little bit higher, but what's pretty powerful here is simply that it does create a little bit more bandwidth, a little bit more buffer between that projected production level and break even here within North America. And so looking at about 700,000 units of additional volume from a year ago on a production basis, certainly some welcome news in from that perspective.
And we just completed our consumer survey, our global consumer survey through the US lens, and just reacting to this chart. We're still seeing a bulk of consumers interested in ICE as their preference, but encouraging growth, 28% looking for a hybrid solution, and 8% looking, for full BEV. So I think those trends, are still above what we sold last year, from raw percentages. So that growth, as we shared, of new programs and the flow of new electrification coming, it seems like the American public's also reacting to that. So with the stability that we're seeing there above that 13.5, up to 13.9, and then with that mix, looks to be an encouraging year for all the investments and all the costs that we've been taking on as we go after electrification as well.
Exactly. And that I think is an interesting point as well. It underscores the fact that if we consider how many new programs are coming and how many more are going to be across a broader range of product segments. And so this is where I think consumers can begin to get excited about having a range of options, a range of choices, so that whatever their need may be, there certainly would be multiple offerings within those categories, and certainly more offerings represents choice, certainly, but then also varying ranges of affordability too. And so I think this is also a really, really strong piece here to help drive some of those numbers higher. And so what's pretty compelling here, I mean, look, there are some real challenges. And so, what's a number of suppliers are having to manage here within this production planning window, right? So in terms of internal issues, which of the following represent your greatest internal issues that you'll face as you meet required levels of production? Not a big surprise, but hourly labor shortages and skilled trade labor shortages are right there at the top. Any comments there?
Yeah, and clearly it's a challenge, and we need to figure out how to solve it. New labor negotiations and contracts are forthcoming. And these have to be the top topics that, from the supply base and OEMs, and along with the UAW, have to address. And whether the two-tier wage model needs to be relooked and understood. How do we attract talent, particularly through COVID and just the pressures on labor in general? And the higher prices for talent, do we need to think about how do we attract talent into our industry, whether that's on the high tech and engineering side and where the industry's going, to, from a labor standpoint, and where these factors are going with the level of automation, the level of capability that's in them as well. So I think we have something to solve. And then as you layer on, diversity, inclusion, and other aspects, are we missing out, as an industry, attracting all the talent that could serve us? And we've just admired on how, the industry is moving in some really interesting ways from, technology. Do we also tap into the sexiness of our industry and where it's going? And it's not the old industry, it's up and coming. We're reinventing ourselves and moving forward. And does that give us a platform to attract talent that, we've been missing out across these last few years?
In terms of external issues, what are some of the greatest external issues? Not a big surprise. Supply chain constraints, disruptions. Number one here. That's pretty clear, but I think this one I really would like your input. The second point is sub-tier supplier financial distress. We talked about cost recovery a little bit earlier, but certainly the challenge here is having some visibility, and then two, having the ability to be a bit more responsive and how to manage that process. So I welcome your input here.
Yeah, I think we've all admired the resiliency of just the supply base. I mean, if we go back to 2008, 2009, the supply base, shrunk by 35%, whether through, acquisition, through bankruptcies and the like. And we've been able to weather, COVID, followed by chip crisis and volume constraints and on the back of all this R&D that we've been investing in. So that resiliency hasn't, been ignored. But now with inflation going up, bank troubles, I think that fragility just around cash, is starting to squeeze. And we've seen at least one bankruptcy at the start of this year, tied to a PE firm, and I think it was a little bit of surprise as they were working through restructuring. So I think everybody needs to, prepare and be thoughtful. And whether that's just around working capital, oftentimes we'll work with suppliers and we'll see, payment terms, over 100 different payment terms, and maybe 3 are the prime and are used, most of the time, but not always. And then just with payment runs, also slightly shocked at how many, early payments are sent. And just some more discipline just around, okay, yeah, we're going to sweep, we're going to do everything this Friday, and not even realizing you're pulling 15, 20 days forward sometimes. And just being really disciplined around your processes from a financial standpoint, and just recognizing, with that further inflation pressure, how do you get your operations just humming and being as clean as possible?
Look, Jason, I'm super excited. I mean, that was a great conversation. Look, I want to thank Jason Kaufman, U.S. Automotive Consulting Leader at Deloitte, for his expert insights here today as we reviewed the first quarter 2023 Automotive Supplier Barometer on production planning and electrification. Jason, thanks so much for your insights, and really appreciate the support, the partnership, and look forward here to next time. Okay.
Thanks so much, Mike. Appreciate it.
All right. Thanks so much, Jason. Take care.
You too.